Next up, we have a panel close to my heart as a lawyer, regulated digital asset exchanges as important players on the market. Moderated by Shailesh Kunnath, co-founder Masary Capital. Big moderator. Come on up, sir. Big round of applause, please. Big round of applause, please. Thank you. High energy. Good to see you again. Pleasure. Maybe you can introduce your co-panelists, and it's all yours.
Check 1, 2, 3. Thank you. Good evening, everyone. So regulation, regulation, regulation. This is a key word on all our mind right now. And to talk more about crypto regulation and regulated crypto exchanges, we have a fantastic panel tonight. And it gives me great honor to introduce you to the speakers. Our first speaker has been recently voted as world's top influencer in blockchain education. He's a crypto pioneer and a blockchain ambassador, a real true visionary. It gives me great pleasure to introduce you to Dr. Marwan Alzarouni, the CEO of Dubai Blockchain Center. Thank you. You can choose any of the white chairs. Yes, that'll be good. Our next speaker has more than 25 years of experience in traditional finance. I believe true adoption of blockchain happens when we have professionals like him take time, energy to learn about this new technology, to embrace this new technology, and even better is to build the best financial products on blockchain. Please welcome Mr. Michael Mildenberger. Long time no see, Michael.
Hey, how you doing?
Our third speaker, she is the CMO of one of the top 5 crypto exchanges in the world, which is Gate.io, and she has been quoted in hundreds of articles and several books. Marie always knows about all the latest projects in crypto, and today to talk about crypto regulation and regulated cryptocurrencies, please welcome Marie Tatibouet.
Almost right this time. Hi, everyone.
Superstar. Thank you for being here, guys. Michael, let's start with you. Do tell us about your journey from traditional market to this amazing opportunity here with crypto.
Thank you very much.
Please tell us about your journey, how you started from your...
Yeah, so I wear different hats actually. So I'm the CEO of a digital investment can called Series 1. We're also a regulated broker-dealer in the US. I'm also a partner at a DeFi fund, which is regulated out of the Bahamas. And then I'm also the chairman of a non-regulated entity, really, which is a DeFi technology platform. So I'm kind of like 2 times regulated, 1 time unregulated, right? I guess the journey started in 2013 when we incorporated a digital investment bank with trying to move as much of investment banking services online. And we started to build an investment platform. We then also, amongst a lot of other licenses, got the crowdfunding license in the US. And then in 2017, the craziness of the ICO started. And the SEC said, oh my God, we don't know what's going on. And a lot of people came to us and said, hey, can you also help us raising money through your platform as a token? And we looked at them and said, no way, we're not going to do that because we don't want to jeopardize our licenses. And then in 2018, when the SEC said for the first time, hey, we think these ICOs are really securities and they should be treated that way, that was for us the opening to also go into the blockchain and crypto space. I mean, we had a platform already with full KML, AML, KYC, the whole 9 yards, automated. So then we took that platform, enhanced it with crypto and blockchain capabilities, and then did first security token deals. And then in 2019, we really looked at the market again, the end of 2019, and we saw the DeFi space evolving, right? And that was very exciting for us because in the DeFi space, in comparison to the security token space, you had a lot of liquidity coming in. Which was missing still in the security token space. I mean, to do a $50, $100 million tokenization of a digital asset, such as real estate, was very tough. Because we don't have institutional investors there yet. And we saw in the DeFi space there's a lot of liquidity and there is very little products though. And so we started to organize a spin-off called Yieldster, where I'm the chairman of as well too, and it's a technology DeFi platform, essentially an automated portfolio manager for institutional investors, because we believe, and that goes to the regulations, that only if you are able to regulate the market to a certain extent, you will actually be able to get regular institutional investors from the traditional space also playing in our space. So my theme is always, I think the crypto blockchain industry has to make a decision to a certain extent. Either you stay in a niche, which it's a great niche to be in, definitely. But if you want to go mainstream and you really want to get the traditional finance industry to come in as well too, you need rules and regulations. And I think that's what we're here to discuss about today.
Absolutely, thank you. I do believe that this is essential for investor protection, consumer protection, and also to provide market some sort of stability, right? But in your words, Michael, what would you say is a regulated crypto exchange?
Is that a question for me?
Yes.
Yeah. What would I say to a crypto-related?
Yeah. What do you consider as a regulated crypto exchange?
Yeah.
How do you define one?
Yeah. So I mean, what we see actually is that you have different products coming in, different exchanges. So you have a crypto exchange, which have utility tokens on there mainly. They are very much regulated in the US right now, as you know, Kraken and the other big ones, Coinbase, etc. Right? So, and then you have security tokens coming in. They have a different license. So for that, you need to have an ATS license. In Europe, you need to have an MTF license. I think I just saw the rules and regulations coming out here, or the intention of it, that you also have something similar with the MTF and OTF license. So you will see these markets getting more and more regulated. And regulation really, I think, mainly means that you know who are the participants in these exchanges, right? You need to know who are the participants in exchanges. You need to have some kind of a protection of the investors and so on. So you need to have basic rules and regulations, is my belief. The difficulty always is it's a fine balance to walk, right? Because we don't want to, one thing we hate, myself too, if we get over-regulated, that hinders business, right? So it's a very thin line to walk, but like I said, in the US, a lot of rules and regulations came in for different silos, right? Different licenses for different silos. We saw that in Europe as well too, and I think we're about to see that here as well. And that's necessary, like I said, in order for this industry to a certain extent grow up, I would say.
Thank you. Dr. Marwan, in your words, how would you define a regulated crypto exchange?
I would not call it like a regulated crypto exchange, but rather I would use a general term like a regulated money handling business. As soon as you handle other people's money, you have an onus to protect that and show actually the licensing authority or the regulator that you are actually taking the precautionary controls that are there, from cybersecurity to actually who has access to actual wallets, to using things like cold wallets, to have cybersecurity controls that are standard compliant, but both cybersecurity standard and also in money handling business standards, from safekeeping and otherwise. So there's a plethora of things that you can actually dictate on exchanges, But again, the more you do, the more it's perceived that it's hindering technology. So you have to strike a right balance. And I think what my colleague mentioned just now is that we need to strike this balance, but also we need to put different offerings and different businesses in different buckets and isolate those ones and try to regulate them, each one by itself, rather than try to take on this huge, giant and regulate it that way.
I completely agree, and I think the crypto space and blockchain is ever changing. Every day there's something new. So 2 years ago we had the ICO buzz. Right now we have the NFT and the metaverse, right? So by the time we start regulating these, you might have something new come out in the future, right? Marie, what would you say is a regulated crypto exchange in your opinion?
Sure. I mean, the thing is that there are so many different kinds of products. It's not just going to be about regulated crypto exchange just for cryptocurrencies. It has to be about digital assets. I think that's a really important point to make. And, you have to take it as a whole, because the governments are not really able to keep up with all of the trends. I think a lot of us feel like sometimes we can't even keep up with all of the trends, right? And the governments are typically very slow to regulate, so it doesn't really fit. And what we have seen, obviously, is it's been very slow for regulation for cryptocurrencies, but we are seeing things move along. We did see Meta, wanted to launch, what was it called, Libra, and obviously the U.S. government wasn't on board with that, even though they got all of the PayPal gang to be able to participate, right? But it didn't really work out. Now Meta is saying, okay, we're going to do the metaverse, we're going to do NFTs. And so now NFTs have come up on the radar. And so as a result, NFTs will be regulated. I think in the end, at the same time as cryptocurrencies, now whether they will be able to regulate them as well as cryptocurrencies is a different story, particularly because, for example, if you take the US market, okay, so who is the regulator going to be, right? Is it going to be at the state level? Is it going to be the SEC? We're seeing the mayor of Miami going around and taking Ethereum to be able to pay your taxes. How does that all fit in? And the truth is, if you really talk about regulation, the entity, the body that's going to regulate is the one that's going to benefit from all that power and most probably all of the tax dollars that goes with that, right? So inside governments themselves, there's often, I would say, quite a bit of struggle about which body is going to regulate it. And beyond that, with several different nations as well, right? Because of the essence of crypto is virtual, it means that you can go, you can move from such and such place to another place. And the governments are very aware of that. We have to kind of see how things are going to progress with FATFA, because I haven't seen so much movement as compared to 2 years ago when they had the big discussion. Was it 2 years ago? 2019. And in Japan, and they had the big discussion. They said, okay, we're really going to come out with things, but we haven't seen so much movement yet. And now we're seeing all the different governments come out with their own plan. But if you take a look, the two places where there has been the most regulation is Japan and South Korea. And in Japan, they have put a lot of regulation, and it has worked out. But in South Korea, not so much. And from what I have seen, a lot of projects have left. There's a lot less volume, way fewer users. And yeah, it's you're definitely seeing, if there is definitely too much regulation, it typically doesn't go so well for cryptocurrency in my observation.
I tend to agree, and I think it's not if the crypto exchanges should be regulated, it's how. Because a crypto exchange it's not only an exchange right now. I mean, the customers, in addition to buying and selling and trading cryptocurrencies, now they have so many products available on the exchanges. You have borrowing, lending services, proper DeFi services. You have opportunities to buy NFTs, to stake, So what sort of regulation does the crypto exchange come under, isn't it? And that's always a challenge. And now, if I can ask you, do you think these regulations could actually be a barrier to innovation? What's your opinion, Dr. Marwan?
I think, look, like we mentioned before, it's a thin line. But I think there are ways where we can actually use technology rather than regulation, like technical controls, things like smart contract, and other mechanisms where we can actually enforce technical controls rather than regulation to do most of the job. Again, a lot of these technologies do not need a regulation. They are actually surviving and thriving and working with the market itself. And you, as a customer, with your risk appetite, can actually put in money or withdraw liquidity or do any of those stuff. And within those smart contracts, there are the terms that you can see as code and literally pick the ones that you think are matching your risk appetite. But again, there has to be some level of regulation. But I think a balance between those two aspects, regulation versus technical controls, I think is the way to go.
I agree. Michael, would you like? Oh, sorry.
Yeah, I mean, imagine a soccer game where you don't have a referee, right? I mean, a lot of times that's what our industry is right now. So I think you have to have, again, you have to have certain basis of rules and regulations so everybody knows what they're allowed to do and what they're not allowed to do. I think the biggest challenge which I see over the last not just 2 years, but really since since the crypto or ICO craziness started, is that you guys, which are in the room, you are amazing because you're so super fast that the regulators never are actually able to catch up. Like that was a difficulty in the US. Once the regulators start to understand what you guys are talking about, you're already at the next subject. Right? You're already at, like, once we got around of like, okay, what's a security token? What's a utility token? You guys are already talking about NFTs, now the metaverse, nobody really know what it is. Everybody has their own definition. So I think that's the big challenge in our industry, that you guys are outrunning everybody all the time, which is super exciting, but is super scary for the regulators to a certain extent. And as you said too, as a regulator, I put myself in the shoes of a regulator. You have to understand what that subject is. Then you have to get your hands around. You have to build teams who understand how to execute on rules and regulations. So it's one thing to put these rules and regulations out. Like the SEC, I think, did a fairly good job of understanding and putting some rules and regulations out. But then you have FINRA in the US, which is the body to execute on these rules and regulations, and they just don't have the capacity to do so. I mean, we know this as a broker-dealer, experience this every single day. And it's not because they don't want to, but they just do not have the resources to do so. And as you said, you have to, as a regulator, sit there and go, which subjects am I going to focus on, right? Because it's not possible to do everything.
Not only that, but keep in mind also you have the law enforcement to handle crypto cases. Right. It's borderless as well. There's an issue of jurisdiction. Yeah. So can you really go after a guy that's not in your jurisdiction? We have still those classical issues with law enforcement where you have a sphere of influence and anybody outside that is outside of your sphere of influence.
But you don't need to be regulated to be able to work with the police. For example, we definitely have in South Korea and in China, and we have been able to recover funds that were used for criminal activity. So you're able to do it. I think the question, yes, the answer is, of course, there are barriers to entry. Particularly, again, if we use the example of Japan, the license is extremely costly to acquire. And so as a result, there's only like 20 or so exchanges. If the barrier to entry is several tens or hundreds of millions of dollars, well, yeah, that's quite a hefty price tag. And you might argue that that's not really fair competition. Of course, there are certain costs to regulating the market. You have to go and check, right, that everything is being applied properly. And obviously, that has to be compensated for. But you might argue, okay, the license shouldn't be so expensive to acquire, and rather you pay on an ongoing basis. That's just my opinion. But I definitely think there is a need for it. But if it's too expensive, it is a huge barrier to entry for sure.
I completely agree. And we need to remove those hurdles, those barriers, because first of all, thank you to all the blockchain enthusiasts out here. You guys are making fantastic products. Keep working on that. Give us better financial products, better products in every industry. And we all deserve better yield, isn't it? And so let's not have this regulation throttle back these innovations, right? And also, I believe these regulated crypto exchanges, along with these regulators, have a big role to play in terms of education. And Dr. Marwan, maybe this is in your area, because crypto is a volatile asset, and all the consumers, they come on board these crypto exchanges, they need to understand about this volatility, and also, along with the regulator, they need to understand how to provide protection for all these investors and consumers. So how do you think that can be done as well?
I think one of the ways we actually teach people in the Dubai Blockchain Center is by doing, actually, rather than just theorizing how something works. So one of the things we teach them, especially the government departments that come to us for training, or the regulators that want to know how to regulate something, is we show them practical examples. We show them across the board how, for example, blockchain itself works. What are the different types of blockchain? How DeFi works? What are the risks associated with them? Let them borrow money. Let them provide liquidity. Let them lend money. All this other stuff practically, so they can visualize and get this tactile feeling of how this thing actually works, and how hard it could be sometimes as a learning curve for people to understand. So once they understand the value add of what this technology is and how different it is, and it's not using analogies and that kind of stuff, but actually trying it out. So if you try to compare DeFi loan with a normal loan and try to see the differences, you're not going to get it. It's totally different beast. You have to understand the intricacies within it. It's the same thing with NFTs. It's the same thing with just cryptocurrencies in general, how a wallet works even within a transaction. And all this other stuff that you have to really invest as a regulator to learn firsthand, rather than theorize or use analogies and that kind of stuff, and to understand how it works.
I think that's the challenge, right? How does, because the innovation is coming from the younger generation, and then the regulation is with the older generation. So how do you bridge that gap to get the investors protected, and they have the understanding, like you said, of a DeFi loan and a normal loan? How are they different? How do the wallet function? And maybe in partnership with these regulated crypto exchanges, we can provide this kind of information and help onboard new clients, who are having this barrier right now because of the, let's say, the lack of regulation, lack of understanding, lack of education in this industry. So, Michael, what do you think? From your traditional background, what sort of policies or what sort of regulation would you want to see in the crypto industry to really, today the crypto industry is a $2 trillion market, and it is quite small compared to the capital market, but to catch up, what's the kind of regulation that's going to help us to really fast track this crypto market from a 2 trillion to maybe, in my opinion, it should be a $100 trillion economy?
Yeah, I think, if you're an institutional investor, then you cannot a lot of times participate in this because of your compliance teams, right? And the compliance teams tell you, well, we don't know who actually is participating in these markets. We have no KYC. We have no AML. So we're going to run into a huge problem. We can't do it, right? These are the policies. So I think the basis is that you understand who is participating in this market, right? Secondly, you need to have a mechanism to keep the bad actors out. So, and that requires some kind of check that people identify themselves who they are on the business side, that you know if there is a business on these exchanges who offer the investors to buy their token, then you need to know who this company is. Otherwise, we saw it over and over again, unfortunately, that you buy something and then you'll never get anything. It's the last time you saw these guys, right? And that's, we all do not want to be in this situation, because our markets essentially is gonna disappear if we would continue on that path then. On the other side, you also need to know who the investors are, right? And as said, you need to make sure that people don't break into wallets, that they don't run away with money, et cetera, et cetera. So you have to know who the participants are. You need to make sure that everybody has a system in place so people cannot break in, so that there is a security of these exchanges, right? In my opinion, they have to be also, the people who run these exchanges have to be audited as well too. So unaudited means nothing else than make it transparent what they're doing, how they move money around, right? I mean, I saw exchanges where they did billions of dollars a day in trades, and then all they did is correct the positions at the end of the day. There is no auditor, there is nothing, right? I mean, that's scary, because, I mean, you can just trust the exchange that these are guys who are good guys, but if not, then everybody's money is gone, right? So, again, it comes to, we don't want to over-regulate, but there should be certain things in place which is necessary to give everybody the comfort that they can participate. And when it comes to institutional investors, they have a responsibility towards their LPs and their investors. And unfortunately, a lot of times the rules and regulations are not there yet for them to participate.
Yeah, I absolutely agree with you. It is appalling what you see as some practices in unregulated crypto exchanges. I've seen, people front-run investors' trades with their own money. I mean, it's appalling. But to answer your question, Sai, I think for me, the most important thing to regulate, you have to regulate so that we can maybe bring in some of the insurance companies so that we're able to deal with all of the technical failures that might happen, since it is a technology. That would definitely be the number one thing. And I definitely would think that regulation is going to come soon, especially because of what I said earlier, which is there is kind of this competition that's happening within governments and internationally. So it is going to come, especially now that the institutional players came along, and it won't be so long until they start lobbying the government as well. And if I were the government, I would probably prefer regulating before being lobbied, absolutely. But it doesn't mean there won't be more lobbying later. I'm sure that there will be. But this is really important. And I also, from my experience, we're in the process of acquiring several licenses, several valuable licenses, not kind of just random finance licenses. And they have changed their stances a lot along the way. And that obviously has made it extremely difficult for us to be able to comply. And really, when you take a look at it, why would you invest all of this time and money and lawyers if it's just going to change, in 1 year? So there is definitely a lot to achieve, yeah.
Thank you. So do you think there is a requirement for more KYC, AML in these crypto exchanges or
I have seen very few centralized exchanges that don't use KYC and AML. I think we've gotten through that hurdle. 3 years ago, I definitely had people say, oh, do you do KYC at Gate? I don't want to use it if there's a KYC. And now users have very much changed, especially as DeFi has become bigger, and so they're just using DeFi products instead. And I would have to say, I have trouble imagining how the government's going to regulate DeFi. Although we have seen some exchanges apparently do KYC for DeFi. So,
Dr. Marwan, what do you think? These crypto exchanges to be regulated, do you think there's more need for a KYC, extended AML? What's your opinion?
I think we have to create the precursors for that, actually. So right now, we don't have something like a global digital identity, for example. There's a lot of talk about decentralized autonomous organizations, but there's no identity tied to the founders or anything. Digital identity in the UAE is leaps and bounds ahead of anywhere else in the world. And this is one of the things that positions us to be the leaders, even in digital identity around the world. And I think having those, infrastructure enablers for things like digital KYC or eKYC, as it's referred in the industry, is important. And I think more governments that have this kind of eKYC and something called decentralized identities will actually help a lot in moving this forward. Again, banks are already doing it, especially here in the region. We have banks, once you actually have an EID, you can actually just get one bank account and identify yourself once, and then every bank account in that region gets your details automatically once you apply for them. So it's like a push and pull kind of technology. In the UAE, we have a vault within UAE Pass that we use it to retrieve and send documents to each one of the documents owners. That's not only your ID, but passports, driver's license, health card, even a drone permit, anything like that. So I think it's about time we'll see these kind of identities being passed to exchanges and back and forth, where we have one identifier for a person, no matter what exchange. So that lowers the possibility for that person being, creating multiple identities in different exchanges, or multiple identities on the same exchange even.
You did bring a very, very important point, is that right now the regulation is very staggered in different countries. I wonder what's the hurdle for all the countries sit together and have a dialogue to say, okay, this is the minimum kind of KYC AML that's required for these regulated crypto exchanges. Michael, what's your take on this?
Yeah, I mean, in an ideal world, of course, we would have some kind of a centralized system in a decentralized world, right? But I think it's very, very tough to create that. I think we have seen several attempts, but it's difficult. But then again, I think you have some leading jurisdictions like the UAE. They work together with the SEC on a regular basis. You have the European regulators as well too. So I think it's more of I think there is not, if you look for like the great solution, I think you will not find it. I think it's just that in each jurisdiction they have to work together, they have to exchange somehow. Each one of them will have their own system in place. So I think that's very, very, very important. But I also want to say too that, I mean, we're talking about rules and regulations and unregulated in DeFi, but it is possible. I mean, we see this right now more and more. There are more and more regulated products in our space, and companies, they are doing that right now. They're taking a DeFi based on a DeFi technology. They are creating a product which is completely regulated, which is audited, etc., and which is being taken to institutional investors, and they are able then to buy into this. So it's not to say that this doesn't exist. You can do it. Just like when the ICO time started and the SEC said, hey, these are securities, yeah, of course, there were people which continued to ignore it. And then there was a group of people which took it on and said, okay, we're going to do a full prospectus, we're going to do KYC, we're doing AML. And then once you have that done, then the next level is the exchange, right? And then the exchange already has a KYC AML product right there, right? Which they then take onto their exchange. So I wouldn't say so negatively in that sense that, or I wouldn't be so pessimistic about, oh, you know, all the hurdles of rules and regulations. We have lots of rules and regulations together already. We can build a lot of stuff on top of that and actually create products already which are for our space. We just have to be aware of it, what's possible, and you know, try not to ignore it, and build products which are actually compliant in some fashion. So we, in my opinion, the biggest value is that you protect the investors. I think that's the biggest thing you should worry about, right? And everybody should be on the same page on that, I think.
Yeah, I think we all agree that you know, the regulated crypto exchanges, you know, and we would like to end. I know we're running out of time, but thank you. Yeah, I think we all agree that these regulated crypto exchanges, they do provide better investor-consumer protection as well as increase market integrity. And we really hope, you know, the regulations in Dubai that's coming up very soon is positive. And even the US recently, we're looking forward for a better solution, and so that we can have the best financial products for everybody out there. Yeah? Thank you so much, and have a great evening, gentlemen. Thank you.
Thanks, everybody.
Thanks, everyone.
Thank you.
Great panel. Let's give a round of applause. Thank you so much.